Welcome to the webinar series of BNI to Gig. As we are coming close to the year end, how are you in your business? We've heard the news, businesses are forecasted to recover only by the end of 2021. So, more than ever, we have to help each other. And so, this webinar series aims to help transform your businesses towards sustainability. We want you to reimagine what your business will be like next year. A special welcome to those who are not familiar with BNI, and we will share a little more about it at the end of this webinar. First, let me introduce myself. My name is Attorney Kenzie of Cubic's office. I'm a proud member of BNI Elite. I will be your host for today's webinar entitled Financial Management to Business Continuity. For the next hour, we will provide to manage and maintain your business's financial health. Are you ready? Great. Let's start. And by the way, if you have any questions, feel free to post in the Q&A icon below, not in the chat. So our first speaker is Dr. Margaret Quue, aka Dr. Jet, Managing Director of ExeQ Consulting Service and a member of BNI Iconic. She provides management consulting, research and training services to organizations and individuals. She has a cross functional expertise in the areas of human resource management, organizational management, marketing, and finance. She also teaches grad school courses at the De La Salle University College of Business and at AIM. Wow, this is like taking a finance course. So, Dr. Jet, why don't you take it away?
Thank you. Good afternoon. Let's do a quick survey. Can you raise your hand if you notice that the amount of cash going in and out of your business has changed during this time? Okay, so we will be talking about cash today because cash is like the gasoline that runs our business. And it's important, of course, to have gasoline in the business. So we all know that because of COVID-19 and the lockdown, that a lot of businesses were affected, not only in terms of sales, but also in terms of collection. Sadly, costs have either been the same or even higher. So that's why maybe a lot are experiencing what we call a cash crunch. I have noticed that a lot of entrepreneurs are very comfortable when it comes to marketing and sales, more than comfortable, super competent. But I also noticed that there are a lot of entrepreneurs that do not have the same level of competence when it comes to numbers. Actually, in businesses, finance is seen as the kontrabida, di ba? So, kuripot, mahirap magpalabas ng pera. And that is because if we look at the objectives of financial management, it is to ensure that funds are available when needed. And so this is our focus today. If we look at financial management, aside from that, we're also wanting to minimize the cost of funds because funds does have a cost, and also to optimize fund acquisition and utilization. As we are preparing to plan for 2021, what we do with our cash or with our finances is something that we can call our defense strategy. When we talk about financial health, we would usually be referring to what the numbers would tell us as far as this group of ratios are concerned: liquidity, solvency, profitability, and operating efficiency. Because we only have 15 minutes, we will only focus on liquidity. And we will not be focusing on the ratios, but we will be focusing on the cash flow because for business owners, this is the one that's more actionable. There is a saying that cash is king. Why? Because when we have cash, it buys us time, it allows us to be more flexible, time enough to pivot, or time enough to wait the situation through. It also allows us to take advantage of opportunities. I think we're familiar with the term pahabaan ng pisi. So this situation that we are in is a situation that demands or where that phrase applies. When we make a cash flow projection, we have to use current trends, no? As what you said, nagbago yung trends of revenue and collection and even disbursement. So we have to prepare our cash flow projection using the current numbers because as what Attorney Roy told us earlier, we're probably looking at the same scenario or the same operating environment up to next year. And of course, we want to make sure that our numbers are accurate and also complete. Given the volatility in the environment, it will also be a good idea to create scenarios in your cash flow. So you can have a good, better, best, whatever scenario you want to call it. Especially given that I know that many business owners are trying to come up with different strategies that may have different results. The preparation of a cash flow projection is not a single or a one time exercise. Of course, this has to be updated and adjusted as needed. In finance and accounting, we usually call it a rolling forecast. No? So you always have a forecast of the next 12 months as you move along. Does your cash flow need to be on a monthly basis? You can have a monthly cash flow, but actually, the tighter your cash, um, it would be better if you would be more accurate. No? So it will not be unusual to prepare a cash flow on a weekly basis, or if your cash is really tight, even on a daily basis. Let's talk about operations first. Of course, maximize your cash flow by increasing revenue. And you can do this by selling more, increasing prices, assuming that the market can bear it, or tapping other sources of revenue by your pivot strategy. On the collection side, remember a sale is not a sale until it is collected. So we also need to ensure that we manage our receivables. Unfortunately, because of the economic recession, we know that cash is tight for many people. So managing receivables would be very critical. You may even want to look into incentivizing early payment. Then, of course, at the other end of the spectrum would be minimizing your cash flow. And this would mean cutting, delaying unnecessary purchases and expenses, and also eliminating avoidable expenses, which would include penalties, charges, and other inefficiencies. Then, a bigger headache would normally be overhead costs. No? So we may also want to look into opportunities in terms of decreasing overhead costs. And I would recommend that we attack the bigger items first. So is there a way of renegotiating or maybe um, making different decisions in as far as the big ticket items are concerned in overhead? Then, if the company has a debt exposure and interest expense forms part of your cash outflow, you may want to look into reducing debt, no? By restructuring or even prepaying, because maybe the amount of savings you will have in terms of interest expense would be beneficial to the business. I separated this other sources of cash because I would, this is usually referred to as extraordinary source already, no? So it's no longer part of operations. Okay, do you have idle assets? In my case, from a conservative perspective, before I borrow, I will liquidate assets first. So you may have inventory or other assets that can be liquidated. People may say that this is not the time to sell because asset prices are soft. But I would compare that with borrowing, no? Because let's say if I sell an asset at a lower price, I would compare that with the interest expense that I would need to pay if I borrow. So liquidating assets is a possible solution to generate cash. Then, of course, sometimes we need to borrow, and it's not necessarily bad to borrow, but we have to check whether our finances can cover it. Um, of course, when we borrow, we have to repay, and there will also be interest expense. So this has to be assessed on a more holistic basis. And of course, borrowing requires that we match our funds properly. So borrow short term for short term, long term for long term. Right now, maybe one of the questions that we may need to ask also is, where do I borrow? No, so part of this will be addressed by Attorney Roy later. Sorry, but I think the newspapers are telling us that as far as banks are concerned, their appetite for lending is relatively low. Then we can also generate cash by infusing equity. If we are to use our own funds, one quick question that I will ask is, are we putting all our eggs in one basket? If we consider getting a new investor, then we also have to look into the implications of having a partner in the business. So these choices of borrowing or infusing equity have to be assessed from the perspective of the viability of the business moving forward long term, and also the preferences of the entrepreneur. So, just some quick examples in terms of financial management or cash management decisions. I have a client that opted to fund their plant expansion through cash reserves and equity with minimal borrowing. And this was a couple of years ago. So, right now, this is paying off well for them because their sales was also affected by COVID. But since their interest expense is relatively minimal, then it was a good decision for them to be conservative in financing their plant expansion. This is an opportunity or an example of liquidating. No? So, another company had investments in marketable securities, but were also paying or also had short term loans. So, we evaluated the level of investment and the level of loans in relation to their working capital, and we found that they can afford to prepay some of their loans. So they ended up saving on interest expense because, as you know, interest income is usually less than interest expense. I've also had projects that involved restructuring of loans with banks. And what I can share is that when we restructure loans with banks, we have to do it early before our due date or before we miss a payment. And then of course, the bank would appreciate, and it will also be to the benefit of the borrower if there is a way of lowering the level of debt. Again, by probably paying off the debt through exchange of assets. Banks would also look for a feasible and reasonable repayment plan that usually would come with a business plan because they need to understand how you intend to address um, your flow problem, and of course how you intend to repay them. It is important that we're able to present this properly because our account officers would need this information when they present the restructuring proposal to their own credit committee. What are the implications of undergoing a debt restructuring? Well, at least the borrower will not be in default, no? So it will be considered as good faith that you advise the bank early that you will not be able to meet your repayment schedule. Because of the restructuring agreement, usually there would be increased monitoring and possibly additional conditions imposed by the bank, such as maybe asking for additional collateral, which is why I was saying maybe you should consider just paying it off. Managing for the long term. Well, we're all in business for the long term, and I hope that we also take care of our relationships as we manage our business. That's why it's good to remember the golden rule: pay suppliers on time. If we want to be paid on time, so I hope that we also pay suppliers on time, especially small suppliers who probably have the same cash challenges as we have. It's also important to be transparent with our suppliers, creditors, and most especially with our employees regarding our situation. And for business owners, again, it is important for our financial records to be in order and for us to know and take charge of our numbers. Lastly, please remember to be realistic and objective when making financial decisions, because all of them would entail risk both in the short term and in the long term. So that's my sharing for this afternoon. Thank you for listening.
Mhm. Okay, so thank you, Dr. Kev, for this MBA level intro in managing our cash flow. I'm sure a lot of businesses would like to undergo a cash crunch. You mentioned earlier something about businesses knowing their numbers. I don't know. It seems like a lot of us actually have a problem with our financial statements. Sometimes they might not be so accurate or updated. What would you advise with something like that?
Well, of course, this has implications also in terms of possible tax liability. That's why it's important to have the books in order. That's one. And but in terms of preparing cash flow projections, you don't necessarily need to have your financial records ready. You can. I hope that your bank records are intact and that you're sure about your bank balances. So I think that's what I would do first: bank reconciliation, and then from there, do your projection using your revenue projections, your projected collection period, and then also your disbursements. So you don't necessarily need to have your all your historical data available, because I'm sure it would be easier to retrieve no, what you are currently paying for at present.
I mean, I guess some of us small business owners sometimes we're running our financial statements on spreadsheets. I mean,
Oh,
what do you,
that's okay. That's okay. I think in terms of um, um, doing cash flow, all you need is a spreadsheet.
okay,
Yeah, you don't necessarily need to use your accounting software for that. It might be more flexible to just use your Excel or your Google Sheets.
okay, all right, I see. So, well, business, we've got to know our numbers. Dr. Ke, let's have time later to answer some of the audience's questions.
Okay.
Okay, and remember, if you have any questions, feel free to post by clicking on the Q&A icon. It's right there below, not in the chat icon. So our next speaker is Attorney Robert T, the managing partner of Ponferrada T Law Offices and a member of BNI Champions. He holds a JD degree from my alma mater, the UP College of Law. He's also a member of the board of directors of several prestigious companies such as DMG Mori Incorporated and Philashphalt Corporation. As one of the youngest to have been elected by his peers, he has been a director of the IBP Manila chapter for 8 years running. Attorney T has advised and handled multiple acquisition deals totaling more than 1 billion pesos. Recently, he was tapped by PH Resorts Group to handle their very successful 1.4 billion follow-on offering. So, Attorney T, the floor is yours.
Thank you, Attorney. Thank you, Attorney Ken. Well, I'm a bit nervous having to follow the lecture of Dr. Ken, no? But I'll try to do my best to follow in her footsteps. Anyway, I have worn my best shorts, so I hope it will give me confidence. So I'm here to talk about financing options for SMMEs. Um, the difference between cash flow and financing is you need financing in order to grow your business because cash flow is not enough, period. Whether you're a sari-sari store, a law firm like mine, or a telco, you will need at some point in your business financing in order to grow it, because you can only grow your business so far with your cash flow. So there are three types of financing. It is actually really simple. There's debt financing, equity financing, and a hybrid, which is just a combination of the two. Uh, Actually, the difference is also very simple, no? In debt financing, what's involved is a cash-to-cash transaction, while in an equity financing, it's usually cash for shares, you know. And how does the investor or the creditor earn? In debt financing, it's just simple. It's the principal plus the interest. But in equity financing, sometimes they have to wait for the appreciation of the shares or dividends. And this is the most important distinction. In debt financing, there is always an obligation for you to pay back the debt. But in equity financing, there's no obligation. They just bought a share of your company. Actually, that's the one of the most important distinctions, because later on it gets muddled up, as I will explain later. So let's talk about common debt financing options for SMEs. We'll start with the easiest and then pahirap ng pahirap, you know. Okay. So starting out, if you need quick financing, you don't have a credit card or any other offering except your your current objects, you can go for a pawn shop. So it's fast because while you literally wait, they appraise your objects and then they give you a loan. It's around 5% interest rate per month, and usually the maximum appraisal value is 40%. Now, I've heard that for Cebuana, they can offer up to 60% if it's jewelry, but usually 40%, that's the maximum na for your objects. Okay, so the next option is credit card. Uh, what do you mean credit card? It's because you can get a cash advance on your credit card, which means instant cash. Just go to an ATM, then get the money, no? And there's no collateral involved, unlike a pawn shop. Now, this is the good news for most business owners. Sometime in September 17, the Monetary Board of the BSP issued a resolution which caps the interest rate for credit cards at 2% per month. But wait, there's more. Uh, they also capped the installment loan at 1% per month, and the cash advance fee from a 3% withdrawal value to just 200 pesos. So there's actually, if you look at most bank websites, no, right now, they started taking down their card installment promo, because most banks have a promo where you can get a loan on your credit card and then pay it in installments. But since the interest rate is now at 1% per month, a lot of them are already moving, already canceling that policy. But that is very, very attractive at 1% interest rate per month. That's a very good option already. Because let's go to the next option. With the bank loan, while it has the lowest interest rate for debt financing, is the number one choice. Currently, you will have a hard time getting a loan, because at the average, they will give you a loan at 7 to 8% interest rate. And this is weird because the central bank has already lowered interest rates so many times. It's already at a rock bottom below 2%, and yet banks don't want to loan to you at a rate lower than 8%. No? But I've already reviewed a bunch of bank options, and I have actually two recommendations for small business owners. The first is the Security Bank SME Business Express loan. It's a loan with a 3-year maximum period, but look at the interest rate. It's just 1.99%. As business owners, for us that's almost free money. If you say it's 2% interest rate annual, and there's no collateral needed. Uh, you should rush to get this loan, because I understand it's already they're running out of funds for this loan. And also, the second thing that I like is the Land Bank Rehabilitation Credit Program for SMEs. So this is fairly new. They only made this, they created this program, I think, around August of this year. So it's a 5-year max loan program. You can get around 85% of your needs, and it's fixed 5% for 3 years. So why is it good? It's because of the 2-year maximum grace period. you don't have to pay the loan for 2 years, no, with the principal and the interest. So technically, it has an effective interest rate of just 3%, which is also, well, almost free money because most people like to take a loan from the SSS, and you know how much the interest rate there? It's 10% plus a 1% service fee per annum. Ito 3% for business loan. That's almost free money. So I would encourage people to go to that. Um, what are the usual collaterals that are accepted by banks? Well, they accept your property, your real estate. They also accept receivables, which is your invoices that are yet uncollected. So you can usually push them as a collateral security. They also accept cash deposit. If you want to separate your personal from your corporate finances, it's useful to get a bank loan for your corporation using your personal bank deposits. And chattel. Chattel is when you mortgage your personal property, such as your car, no, or jewelry. It's called chattel mortgage. Uh, I would recommend that you go to BPI, Union Bank, and Malayan Bank. Why? Because these three banks have a agreement with the Phil Guarantee Corporation, which is a government institution. Under that agreement, Phil Guarantee will guarantee 50% of all loans to SMEs. So these banks have an incentive, or at least are better protected to loan to SMEs. So take note of those three banks if you want to get financing. Uh, and finally, so when you talk about debt financing, we have the good old-fashioned promissory note, which is you have to make utang to your family and friends, so you give a promissory note to them. Um, well, the rule of thumb is that to entice your family and friends to give you a loan, or your friend, or your parents, siguro naman the interest rate should be more than a bank or a government bond or a corporate bond. Ano yung interest rate sa bank? It's below 1%. What's the interest rate at the T-bill rate currently by the government? It's 1.25%. What's the current corporate bond? Ito, mahirap to because San Miguel offers a 4.65% preferred rate. So siguro something more than 4.65% will be enough to entice people, no? But later on, when I discuss hybrid instruments, I will give you some other options to entice more people to give you to loan you money. So let's go to equity financing options. Well, this is simple. No, it's just selling your shares of stock to an investor. What are the standard things that you should note? Well, usually when someone invests in your company, they would request a board seat, no matter how little their investment is, because they want to be able to oversee the transactions of their company. And second, usually you are required to get their consent before certain acts can be made. This can be when you intend to spend in a contract more than a certain amount, you need to get their consent. When you want to get an additional director or additional investor in, when you want to change your articles of incorporation, so stuff like that. It's in the fine print of any agreement that you enter into. And what are the reasons for entering into equity financing versus debt financing? Well, if you're the creditor, you're the investor, you're taking on a higher risk because there's no obligation for the debtor to pay you back. You're relying almost solely on the appreciation of that stock, or if the debtor will declare dividends at some point in time. So naturally, you want a higher upside. In a loan, you're just limited to the interest rate, say 8%, 10%. But when you invest in a company, it's not uncommon to maybe double or times five your investment, diba? So the higher upside compensates for the higher risk. Now, if you're the debtor, there's lower risk to you because there's no need to pay back the equity investment in your company. Of course, some people will say there's higher risk of losing your independence, but usually that's a fine, that's a gray area that you have to cross. But overall, there's lower risk to you that you don't have to pay it back. But also, there's lower upside to you because they own a part of your company. If you use their money and you grow your company to a certain level, you only get a certain percentage of the upside. The creditor gets gets a portion like 20%. For you, it's just 80% or 40% left na lang. So the lower upside compensates for the lower risk. And this is the most important thing, no, yung taxes. Actually, most investors actually look at this as the primary reason why they would invest in your company rather than go for debt financing. Why? In equity financing, as I said, you get paid when you sell your shares or you get paid on dividends. Now, a dividend tax in the Philippines is just 10% compared to your ordinary income tax. When you get your interest, it's at 20 to 35%. And then also, if you sell your shares and the company is not listed in the Philippine Stock Exchange, the tax is just 15%, again, versus the interest income between 20 to 35%. And actually, right now, there's a sort of a loophole being used by the parties when they try to donate the property or they try to donate the shares to someone, because donation is just 6%. So it's a loophole that I know a lot of companies are utilizing now, what they call a fake donation. Okay. So, attorney, how do I value my shares when I want to go equity financing? There are 4 accepted methods. We'll start with the ones that are used in public companies like the stock market, and that's the earnings per share method. This is just simply, taking the summation of all your earnings and divide it by the number of shares, right? You take your profit pala, your net profit, then divide it by the number of shares. And then there's a dividend discount method where you take the sum of all dividend outflows and then you divide them by the number of shares of the company. Uh, Actually, I'm oversimplifying this method, no, because it's sometimes integrated with the model, which is a discounted cash flow. So the discounted cash flow model is you take the summation of all your cash flows, and then you divide it by a special number, which as investors we call it the weighted average cost of capital, WACC. So, attorney, how do you determine this WACC? Well, actually, this is a secret number. This is a proprietary number. A lot of hedge funds are created based on their secret formulation of this weighted average cost of capital, because it may include a lot of factors to compute it. But basically, yeah, they would divide the cash flows according to that special number, and it will explain to them that the rate of return from your investing in your company is better than any other investment method, such as index funds, mutual funds, banks. Yeah, that's how they determine it. Ngayon, I would recommend to maybe 90% of people to just do a simple EBITDA multiple valuation. What's EBITDA? It's earnings before interest, taxes, depreciation, and amortization. So you get your EBITDA for the current year and then times it by 3 or times it by 5. So that's a basic, simple indicator of the value of your business. And you'd be surprised. There was recently a study in Columbia University in 2006, and it said that EBITDA multiple valuations are actually slightly more accurate than the discounted cash flow model and dividend discount method. So, so simple is often usually better, no? You could simply use that just so you can easily value your company. Okay. So just a quick note on dilution of shares. Obviously, if it's just one investor, you can do the math in your head. If you give him 20%, you get 80%. But if there's more than one investor, and especially if there are subsequent investors, which would dilute both you and your first investor, you need to do some calculations na. So just take a screenshot of this slide. You can go to this website. It's a dilution calculator, which is free, and very intuitive. There's even a pie chart. So maybe I'll give you 5 seconds to screenshot it so you can calculate your dilution. Okay. Okay. So now, this for me, no, is another form of equity financing. Although, if you're an accountant, strictly speaking, it's neither debt or neither equity. It's just an asset sale. But For me, it could be considered as equity financing. What's invoice factoring? It's when you sell your uncollected invoice and the company takes a 20 to 40% cut on those invoices. Uh, the upside for you is the collection of those invoices is handled by the other company. So what companies in the Philippines are engaged in invoice factoring? There are two old companies already. I think they've been here for more than 5 years. ExeQ and First Circle. They engage in invoice factoring. They have actually have online marketplaces where invoices are sold online and people can buy it and well typically expect to get between a 10 to 15% return. So you could look into these two companies, ExeQ and First Circle. There are actually more, but these companies have been there for a number of years now, so they're probably more stable than most. Okay. So now let's go to the hybrid. Ayan. The hybrid is what we call a convertible note, which is usually a promissory note. And then if you can't pay that promissory note, the creditor has the option to convert it to to the stocks of your company, usually at a discount. The normal interest rate for these notes can range from 8 to 15%, but on the average, usually 8%. No? So I like to call this the beauty queen of debt instruments because talagang it is a magnificent and a beautiful contract. Why? First, it minimizes the risk of the creditor because it's a debt instrument. Eh. They can call on that debt and you have the obligation to pay it to them. But then it lets them participate on the upside. If the company grows, they can easily convert it to stock so they can participate in the growth of the company. So it's amazing. Minimal risk but high upside. And second, it is extremely flexible. And I cannot emphasize this enough. In fact, I can do a 1 hour lecture on all the options available in a convertible note. But just for the sake of this seminar, first, you can trigger the duration at any time. You can call it anytime. You can convert it to shares at any time. So it allows you to save on taxes. Like I said, if you feel that you intend to pay a lot of taxes on the interest income, you can call it at a later point in time as equity to save on those taxes. And second, it can be designated as senior debt. What does this mean? In case the company goes bankrupt or this note can be senior above all other obligations. So you get paid first. And then third, what if you're not sure on the valuation of your company, but you need financing already? Then just do an 8% interest rate loan and then let the creditor give the valuation at a certain date on a certain computation, right? And then fourth, you can always put in an anti-dilution provision, which means that the creditor can invest in additional shares. If in case there's another investor who comes in, the first investor has the right to match or to buy additional shares up to a certain price. And then finally, you can also give the creditor voting rights, even though his investment is just a debt instrument. You can give him a nominal share, 1 share, so he can have voting rights to give him more confidence in investing in you. That's why I was saying no, you can beautify the ordinary promissory note so you can entice more investors to give you debt financing in your company using the convertible note. And it's so easy to make when you just ask any lawyer to make you a convertible note. And then there, you can offer it to any other investor already, di ba? And finally, it's transferable. It's a negotiable instrument, like a check. So you can sell it. The creditor can sell this note to anyone, di ba? In case he doesn't want to wait for you to call the shares, you can just sell it to anyone. It's transferable. So that's why this convertible note should be an option for you if you want to go into financing later on. So that's it. So I hope you learned something from my presentation. Thank you very much.
Attorney Rob, everybody likes the idea of free money. I've heard that phrase. So yeah, so I was wondering, I mean, you've got all these options, you mentioned convertible notes, equity financing. What would be, I mean, how would I consider one or the other? I mean, how would I evaluate these options? Perhaps you could give us a little more guidance on how you would advise your customers.
Yeah, well, again, no, I mean, Dr. K will surely scold me because it's important to have your numbers correct. That's right. Pero as a rule of thumb, no, uh, the more confident you are in yourself, in your business, and in your business model, then you should go for debt financing. Because by then, it's just a matter of numbers. Can I pay the interest rate at this point in time? And kikita pa ba ako even though I pay the interest? But the more unsure you are of yourself, of the business model, then the more you should go for equity financing. Because you need to protect yourself. You don't want to go bankrupt, diba? And have to sell your assets to pay for a debt that you can't pay. That's why most startups go for equity financing. They sell their shares because the model is uncertain. And that's why most big companies like San Miguel or Ayala, they go for debt financing. They issue bonds with set interest rates, set terms, because they know their numbers and their business model. Yeah.
I guess again we have to know our numbers. Huh? Well, why don't we bring Dr. Ke again back here? Dr. Ke, if you can turn on your video so we can both answer. You can both answer some questions from the audience. I think you can view them in your own Zoom window. I noticed there was one question by the audience. Dr. Ke, maybe I'll read out the question and maybe you can elaborate a little bit on your written answer. That's okay. Uh,
Yeah, that's
for
fine.
Yes. Would there be a healthy leverage level, or is it better if all could be funded by equity? No borrowings if the SME can afford. This was asked by Jennifer Romero.
Uh, there is a concept called cost of funds. I think Attorney Rob mentioned it earlier. Sometimes it's the cost of funds is cheaper than the cost of equity. So you, of course, would want to tap which is cheaper. When we say that the cost of equity is maybe higher, it's you're looking at alternative investments. No? So what will my money earn if I invest it in an alternative investment? So if you compare that with available debt financing, sometimes the cost of borrowing would be less. So there you can actually compute for cost of funds, no, try to balance your debt and equity. But I also mentioned that it also depends on your industry. It also depends on the type of industry that you have. We see that industries that are, for example, infrastructure or involved in long gestating projects would tend to have higher leverage positions. Again, because the size of the projects, usually that's difficult to finance just by equity. And the nature of the projects, well, there's specific project financing, eh, diba? So those types of industries would um, usually have higher debt component. But I guess the rule of thumb always for business owners, no, I when Attorney Rob and I seem to argue on our points, it's really that, eh, diba? It's really that because you really have to make a decision, no? So for example, of course, if you're sure about your numbers and how things would turn out, then it would be easy, I guess, not to make decisions in terms of debt. From where I am, I would admit that I'm conservative, no, especially in these uncertain times. That's why I would go for more conservative approach. And also sometimes it's not your choice. Sometimes there is a lack of access, no. I think a lot of SMEs find it difficult to borrow, no, because of the conditions imposed by the traditional lenders like the banks, no. So for example, I want to borrow but I don't have collateral, so it will probably be difficult for me to access those funds, no. So that another thing that would influence the kind of decision that a person would make is the individual decision maker's risk profile. Kasi iba-iba tayo ng risk profile, eh, 'di ba? So that also affects the way that we make decisions.
Thanks. And there's a question here for both speakers. In your respective industries, or it may be some guidance from your clients, what's your economic outlook for the first semester of 2021? Would there be any advice that you would give business owners based on this economic outlook? This was asked by Det Bernabe.
I think the economic outlook in terms of projections, we already have the official numbers, diba? The official numbers from the like ADB, NEDA. So although the vaccine is promising, it's there. Whether that becomes available to the Philippines, of course, is another question. I think for the first quarter, we probably will be looking at the same environment that we have now. Actually, it's kind of, remember that most businesses have fourth quarter as their peak, di ba? Yun yung medyo iffy dun eh, no? If this is your peak and the situation is still the same, diba? So that's why it's really helpful right now to have a longer view of what the finances would look like so that we will not be caught off guard.
Ako on my end, no, uh, kasi usually I like to look at the positive numbers as well as the negative numbers. And well, the one positive thing is the economy grew by 8% quarter on quarter. So, I mean, wala pa tayo sa Christmas and it already grew 8% from the pandemic level. So I think by first quarter, as Dr. Ke said, things may be almost back to maybe 80% of normal. Because I think the economy will be recovering faster than we anticipate. Because people are there's already, you can feel it that people are really growing tired of being scared of the disease. So more people are going out, more people are doing their business even though there's a threat. So it's just a growing trend that will snowball hopefully with the addition of more vaccines.
So we have one question here, which I think you answered, Attorney Rob. Maybe I'll just read it out so that you could clarify it for the audience. Attorney T, how much is the loanable cap for Security Bank and Land Bank? This seems to be, your slide really piqued their interest. Hold on.
Yeah. So I typed the answer. It's 5 million for Security Bank. 5 million, no collateral yan. And then for Land Bank, there's no stated limit. But they only have a 10 billion initial fund. So you better hurry. Unahan na kayo dyan.
Okay, maybe perhaps for, again, both speakers, I suppose this next question, they're taking it from the point of view of the person who will finance. So the question is, for equity financing, how are we able to do due diligence? Say, I wanted to finance another company and it would be equity financing. I guess that's how I understand this question. And it's probably asking yourself, how would I be able to do due diligence on that company?
Okay, I'll go first. I'll look at the numbers again. I'll go back to the numbers because if you become a part owner, then whatever that company gains or loses is also part of your burden, no? So, besides, when you make your valuation, you have to make sure that the basis of your valuation is accurate. So, I will be looking both at the existing numbers in terms of what the company owns and owes, and also the business model moving forward. And when I say look at the numbers, that's only the starting point, I guess, because the assumption is that the results of operations are reflected in the numbers. You may also want to look at the organization per se, whether the organization is poised to support the uh, strategies moving forward, or at least so that you know what you need to fill in order to facilitate the growth of the company.
Yeah. Dr. K is right. There are really three levels to due diligence. And the first level is the financial due diligence. No, you hire an accountant or several accountants to review the books of account of the company. Then once you've done that, you've done your financial due diligence. The second level is you confirm those numbers. You do operational due diligence. You interview the employees, You go spend a day with the company, you study their systems or operations, you interview the staff. And then the third level is you go for the any legal problems that they may have. So are there any existing cases, existing possible liabilities? Recently, there was now a fourth level, and they call it IT due diligence, where a programmer checks their IT system.
For security.
For security and to see if there's what they call technological debt. I mean, if they have to change the system, how hard it will be to change it.
Yeah,
So something
and
like that. So,
major investment.
yeah, it's a new thing na ngayon. Eh. IT due diligence. So there.
Okay. Well, thank you. I'm sure there's still a question, but unfortunately, we're running out of time. For those who would like to learn more about our two speakers, here are their contact details. I urge you to take a screenshot if you need any assistance from their business. Also, for those who want to learn more about BNI, we are the world's largest business referral organization, a group of professional business owners that focus on helping grow each other's businesses through collaborations and giving referrals to each other under the philosophy of givers gain. You can learn more about it by accessing the website bnitagig.ph or by simply asking the person who invited you today. Thank you, Dr. Jet and Attorney Rob, for sharing your time and your talent. Uh, Perhaps if you have any parting words of wisdom for our audience.
I go back, know your numbers. And also, I guess, make information based decisions. So, there.
Yeah. So manage your cash flow so your business will survive, and then look for financing to grow it.
Well, thanks again, ladies and gentlemen, for joining us. We hope to see you again at our next webinar on December 2 from 5 to 6:30 p.m. Our topic here, as you can see from the slide, is reinventing products and services. You'll hear some case studies about people from different industries who will share how they reinvented their products and services during this pandemic. We hope you could join us there. And as always, please give your feedback as we believe in continuous improvement. We will post a link in our chat box right now, but you will also be redirected to this survey after you sign out of Zoom. So let us continue to restart the Philippines, one business at a time. Enjoy the rest of your evening. Mabuhay.
Mabuhay. More than a greeting, it's a word that captures the essence of the Filipino. Most often, it's how we say welcome. It's our way of inviting you to our home. Our way of inviting you to the party. Our way of inviting you to the family. Mabuhay may also mean a song of hope. We may often be hit hard by adversity.
Pati na po ang pagragasa ng baha sanhi ng storm surge.
Naipit ng iyong tatay. Mahirap na.
But we're not easily shaken. Times may change, but the Filipino spirit will always stay the same. We always find hope in the darkest hours. We always prevail. Mabuhay in itself is life. It sets a reminder to not just survive, but to live. That the Filipino may falter, and we might fall to the ground. But despite all this, the Filipino spirit lives on. We continue to persevere, to laugh and smile, to enlighten others, And even if we have just a little to give, we continue to offer a helping hand. We continue to celebrate life. Mabuhay is to move forward. More than being hopeful, it is striving for a better tomorrow. And at BNI, we share the same drive that will shape a new future. Because more than connecting business leaders with each other, we are a brotherhood. The world is changing, and we are up for the challenge. Now, more than ever, we are changing the way the world does business. And for that we say,
Mabuhay ang mga manggagawang Pilipino.
Mabuhay ang mga nagsusumikap.
Mabuhay ang mga patuloy na lumalaban.
Mabuhay ang mga makabagong bayani.
Mabuhay ang Pilipinas.
Mabuhay tayong lahat.
Mabuhay, BNI.
Mabuhay BNI.
Mabuhay, BNI.
Mabuhay BNI.
Mabuhay BNI.
Mabuhay.
BNI.
Mabuhay BNI.
Mabuhay, BNI.
Mabuhay BNI.
Mabuhay, BNI.
Mabuhay BNI.
Mabuhay BNI.
Mabuhay BNI.
Mabuhay BNI. Mabuhay BNI.
Mabuhay ang BNI.
Mabuhay BNI.